Financial Survival Network, helping you to survive and thrive in the new economy. Get our complimentary newsletter at financialsurvivalnetwork.com. This is the Financial Survival Network.
Financial Survival Network is presented to you by Regal Assets. Buy and sell physical gold and silver through your existing retirement plan, 100% tax-free with Regal Assets. If you want to include physical gold or silver in your existing IRA or old 401k, request your free investment kit, which was recently featured in the Forbes and Smart Money Wall Street Journal magazines. Call toll-free 855-678-6620, 855-678-6620, or visit regalassets.com. We're just about ready to wrap up here at Hard Asset Chicago, and our old friend Ron Hera is here. He's got a table at the show. He's been watching the action. Ron, how you doing?
Doing good, Kerry.
So what's your thoughts here, putting aside the attendance numbers?
Well, I think we're pretty early on in the recovery of the precious metal stocks in general, because we saw those stocks come down to a very low level in the middle of the summer, especially in May. And basically, the spread between the metals prices, which at that point had sold off, but they were trading in a range. So what happened was the spread really grew between the stock prices and the prices of the metals. And I think there was an expectation in May, in particular, April and May, that the economy was recovering and that things were kind of getting back on track, and that gold would continue to sell off, and silver with it. And as a result, people just exited the shares. And early on, a lot of the funds kind of pulled out just because the metals prices had come off. And so that basically collapsed the prices of some of these stocks. Now we're seeing the metals come back. We're also seeing that a lot of the optimism in the summer hasn't materialized. And in fact, the economy hasn't really recovered to the extent hoped for. And in fact, it looks like we're in a double dip here.
So in other words, if I could summarize what you said, happy days are not here again. And are we going to see huge hedge funds and mutual funds rush into these metals companies as the underlying metal prices of gold, silver, platinum, uranium, whatever, go higher?
Well, eventually I think that'll happen, because I think that the prices will continue to rise. I'm not sure it's going to happen as quickly as some people hope. And the reason for that is that, QE3 has a different structure from QE2. So debt monetization in Europe, what's being called OM2, and QE3 here in the United States, these programs will debase the two major currencies, the euro and the dollar. And, the Bank of England has engaged in repeated rounds of QE, as has the Bank of Japan. So given that that's the case, the prices of real assets can only continue to rise overall, because money basically is being devalued.
Yeah, the debasement marches on. There's nothing stopping it. And, we can get into the morality of inflation another time, because we both feel that it is the most amoral thing that a government can do. And everybody, at some point, when they realize that price inflation starts taking off, is going to look for hedges, look for ways to protect their wealth. So getting in there early makes a lot of sense, doesn't it?
Well, that's definitely what I think. Although I would caution people that, although I'm not a financial advisor, but what I think is that QE3 has a particular structure. They're buying mortgage-backed securities deliberately, and the idea is that money will increase bank capital ratios. It'll stay relatively contained within the banking system, and that therefore it won't cause the same kind of capital flows and speculation that we saw with QE2. And hopefully you wouldn't see asset price bubbles. And also, since banks will have more cash, the thought process here is that they will lend into the economy, to small businesses and to consumers. There's a number of problems with this policy. And the first one is that basically there aren't any conditions imposed on banks to prevent them from using the money to speculate rather than loaning it into the economy. And there's no incentive for them to make those loans into the economy, particularly with what looks to be a recession going on right now. So that's the first problem. And the second problem is that in addition to the fact that there are no conditions imposed on banks, the reality is that we never put back Glass-Steagall, and these depository institutions also are basically creating securities, and they are engaged in financial markets, speculating. And so I expect there will be inflation as a result of this, and maybe not to the same level as QE2, but for basically the same reason, and not as quickly, though. And that's what I'm saying, is that I don't think that the commodity prices are going to shoot up as quickly as they did under QE2. In addition to that, we have a slowdown in China, so industrial commodities I do not expect to rise at the same rate or at all.
I'm going to run one thing by you on QE3 that hasn't been talked about, but it's my personal belief will occur. They're going to buy mortgage-backed securities. The banks are buying them up by the bushel load, and they're going to sell them to the government, to the Fed, at a profit. And then they're going to take the proceeds and buy more bonds, or they're going to be buying treasury bonds to help finance the deficit, because with trillion-dollar-plus deficits and a limited market for U.S. Treasury securities, somewhere around $55 billion a month, the difference has to be made up somewhere. So you give the banks the money for the mortgage-backed securities, put them on the Fed's balance sheet, use the income from those securities, both prepayments and interest, to then buy more bonds, which then the banks use the proceeds to actually buy risk-free Treasury debt, and that's how the deficit gets financed.
I think that's exactly right. And not only that, that actually is what happened during QE2. So when the Fed was buying treasuries in the open market, there can be no doubt, and you can look at the charts, and you can clearly see that the money the Fed was creating flowed into the stock market, it flowed back into the treasuries, and it flowed out into foreign stock markets and into speculation in commodities, which is what caused a lot of the prices to rise, and that was linked to the Arab Spring. So it's geopolitically destabilizing, and QE3 will ultimately have the same effect. I'm only saying that it won't happen as quickly as it did in QE2.
So it's a little more strategic, longer-term plan, but the net result is the same, that commodities go up and money loses its value, which means that for the average Joe to protect yourself, to stop your wealth from being confiscated through inflation, you've got to be looking at real assets, real wealth.
Well, that's what I think. So I invest in hard assets outside the financial system and also in stocks of companies that produce natural resources.
Right. And just as we said, you're not a financial advisor, but you've got some stocks that you really like a lot here, don't you?
Yeah, I'm invested in several of the companies that are here in Chicago, including Fortuna Silver Mines. I wrote an analyst report on that. Anyone can get that from the Hera research website. It's just HERA research.com. Also, First Majestic Silver, we have that in our portfolio. It's up 500% since 2010, which is one of the best performing stocks in our portfolio. And there's some other good companies here too, like Silvercrest, for example. We just added that to our watch list, and B2 Gold, which we also just watch listed. B2 is an interesting story. They expect to increase their overall gold production 300% by the end of 2016. That's quite a big jump. In addition to that, they just announced an M&A deal that's going to double their current production from current levels. It'll more than double it just as soon as the merger is complete.
Yeah, that's some pretty impressive stories. In the interest of full disclosure, I've owned Fortuna Silver for about 2 years, not adding or taking away from my position. I have no intention of doing it, but I am interested in Silvercrest, plan to do some more research in it because they've got a really compelling story. You know, you can go back to financialsurvivalnetwork.com, hear my interview with the CEO, but it was a company that started out wanting to be a silver miner, and now they're putting out as much gold or more than they're putting out silver, and they've got huge properties with escalating production. And if the price of metals cooperates with some of these companies, we're going to be looking at monster returns on them.
Well, it's definitely, Silvercrest is a great example of how the economics can work out in terms of the ore grades, the nearness to surface, the cost of the actual production process in terms of what that production is, whether they have to crush the ore and what kind of chemical process that you need to use to recover the metals. So there are a lot of projects where, I mean, there's a lot of variation in terms of what the grades are for different deposits, as well as the depth and the type of mineralization or the type of rock that's there. I mean, not to get too technical, I'm not a geologist myself, but Silvercrest is a great example where they really have a low-cost production. So when you look at the grades and compare it to some other deposits, you might think that it's not as high grade, but actually what's important here are the economics.
Absolutely, and the increases in production that they're going to be realizing. I mean, smart group of people. They've really done a lot of things right. And there's a number of those companies here at at any hard assets conference as well as resource conferences. That's where the money is going to be made in the future, not the least of which because of QE3 to infinity and whatever they're calling it in Europe. It's money printing by any name. And that's the world we're going to be living in for the foreseeable future. So you really have to act now. First and foremost, I think physical metal, have a core position of physical metal in your portfolio. That's what I do. And again, I'm not a financial advisor, and neither is Ron. You have to do your own research, but don't expect your stockbroker to heartily embrace that strategy, right?
Well, all the companies that I've invested in are companies that I invested in because I believe they'll be successful as a business in terms of being a profitable company. First Majestic and Fortuna Silver being two great examples of that. On the watch list, B2Gold, already a profitable company with 2 operating gold mines in Nicaragua. Silvercrest also, I haven't invested in that company, but it's definitely on the list as something that I might invest in the future. So my thought process is that, I look for things with growing resources, growing production, growing cash flow and earnings, and where not only that, I can see a low production cost. And that's one of the attractive things about something like Silvercrest. So what I look for there is that, my investment's going to work. This is my theory, is that my investment will work even if the metals prices stay the same, or even if they move down. That growth story will still cause that company to increase in value over time. Now, if the metals prices move higher as a result of QE3, for example, which is what I expect to happen incidentally, that's what I would call an afterburner that's going to increase those stock prices more than they would have increased otherwise.
Yeah, great point. Yeah, you don't invest because you're investing in inflation. You're investing in sound business entities who have an edge. And a lot of these businesses are in Mexico. Amazingly enough, after all the bad press that Mexico gets, to have 1,900 mining projects underway there, and a number of the companies that Ron's referred to, that you see their growth stories, and that the Mexican government is much more friendly to capital investment and business expansion than many parts of the U.S. It's kind of amazing to see that.
Well, I would agree with that, and I think Mexico is a resource-rich country, but so is the United States, and I think the United States is going to change because we're seeing terrible economic conditions here, and this is an ongoing problem. Of course, the economy is you could say bifurcated. It's been called a two-speed economy, and we've seen industries that have recovered and that have done well, such as the banking sector. We've seen other industries and broadly speaking, small businesses, but not in every category, that have struggled. And so we have a very mixed picture economically, but overall, we're seeing an economic decline in the United States. And as that continues in this double dip that we're experiencing now, I think that the thought process will change around dirty industries. I say that somewhat facetiously, like manufacturing and mining and so forth. For example, there's a couple of gold mines in Oregon. And it's often thought that Oregon is a very, ecologically aware state with strong environmental regulation, and it is. But there are operating mines in Oregon, and not only that, there are mines under development in Oregon, not the least of which is Calico Resources and here Orsa Ventures.
Yeah, absolutely. I agree with you. There's a reawakening on how wealth is really created, that often the easiest way and perhaps the best way is to pull it out of the Earth's crust, to exploit the resources that you have, rather than writing new algorithms that some overpriced Wall Streeters use to front-run the market by 18 nanoseconds and make a few $1,000s. So, Ron, got to get going now because we are leaving, but find out more about you and the site. Where do we go?
Just visit heraresearch.com. It's HERA research.com.
All right. We'll talk to you soon, Ron.
Thanks for having me on.